Hi, and welcome to our March edition of Up to Speed. My name is Mike.mader, the dealership industry leader for Baker Tilly US. Up to Speed comes to your mailbox the third Wednesday of every month, and if you would like to listen to some of our past episodes, you can find them at www.bakertilly.com/dealerships. If this is your first time seeing an Up to Speed episode, we are glad you are here. We're here to provide you with relevant, up-to-date information that is quick and easy to digest that pertains to tax, accounting, and operations of an auto dealership. In the February episode, I discussed outsourcing of payroll and HR and how it could be efficient and an effective way for your dealership. At the end of the episode, I mentioned that our March episode was going to discuss 2023 numbers and trends for 2024. Well, I decided I didn't want to look back just to tell you some of the things you already know. Grosses are going down and expenses are climbing. So I thought I would talk about something that was even more relevant that is going to help you put more of your hard-earned dollars to the bottom line, and that is credit card processing fees. On average, credit card processing fees cost dealerships between 1.5% to 3.5% of each transaction's total. Now, I said transactions total because that's not 1.5% and 3.5% of gross profit. It's the percent of sales. According to NADA's 2023 mid-year annual financial profile of America's franchise new car dealerships, the average dealership had 12.6% of its total sales from the fixed operations. That does include the body shop. This is an average of about $8.7 million a year in parts and service alone. And according to Capital One's shopping research, 70% of nationwide retail sales dollars are from credit card transactions. If we relate that to auto dealership service and parts sales, that would mean the average service and parts department generates approximately $6 million per year in sales that are paid with a credit card. What does that mean for you? Well, what that means is that the average dealership pays around $165,000 per year in credit card transaction fees. That's almost $14,000 a month. So this is an area that we need to be focusing on. So what can you do about it? Well, today we're going to talk more in depth with Amberly Allen from Dealer Merchant Services. Amberly is the founder and managing partner and has been working with dealers for close to 20 years. She understands that maximizing profits is one of the most important topics in a dealership. She began learning more about one of the largest and most often overlooked expenses, credit card processing fees. After spending several years researching the legislative changes, Amberly created Dealer Merchant Services. Hi, Amberly, and welcome to Up to Speed.
Hi, Mike. Thanks so much for having me. I'm thrilled to be here.
So let's get started. Why don't you tell us a little bit about Merchant Services, who you are, what you do?
So Dealer Merchant Services helps dealers pass along their credit card fees to their customers. But most importantly, we want to do that within the legal and compliance regulations specific to the states, as well as without disrupting CSI. So we want to make sure that we do not disrupt the customer experience if we are going to pass along these fees. And that's where we come in.
Okay, so there are a lot of legal and compliance requirements when it comes to surcharging. Can you touch on this a little bit?
Of course. So throughout the country, there are 2 states that remain that don't have any ability to pass along surcharges. That's Connecticut and Massachusetts. But it's important to note that those dealers that are in New York, California, and Colorado, there's specific nuances for those states. But what's important from a compliance perspective is there's 3 major components. One, first and foremost, the dealer cannot profit in any way from the additional 3% surcharge. It must be a straight pass-through. The 3% comes in from the customer, the 3% goes straight out to cover the cost of processing. 2, you must have signage at the cashier and every entry point into the store. Now, of course, we provide all that signage for our dealers, and ours has been approved by Visa, but it's important to know you have to have a partner that's going to give you the appropriate signage. And lastly, you have to have a partner that's going to charge a flat rate for that surcharge and give you the signage to ensure that those first 2 things are happening from a compliance standpoint. It's also really important to note that you cannot charge a surcharge on a debit card. There are certain things called a cash discount, and then there's something that feels very synonymous called a compliance surcharge. We only offer a compliance surcharge because that's the right program for the automotive space. A cash discount may be able to be offered, however, it's not right for automotive because they're charging surcharges on debit cards.
Wow, that's a lot of information to take in already. So how are you guys different than what every dealer has got a credit card processing company
Of
right now.
course.
How are you guys different from what they currently have?
Well, first and foremost, we only work with dealerships. We have 565 stores in 41 states. We're endorsed by 11 state associations, but fundamentally, our entire focus is to make sure that the dealership follows the rules and regulations and also understands how to communicate it the right way to their customers so you don't have CSI issues. Every dealer we've talked to has said, look, I understand I want to save this money, but what's it going to do for my CSI? How are my customers going to react? Bottom line is the way that people pay for things is changing. We know that 87% of consumers have a debit card. We know when we look at a dealer statements what percentage are already using debit cards. So oftentimes 35 to 45% of customers are already using debit. So nothing changes for a large percentage from a pricing standpoint. And then we also know if you've ever sent money via Venmo or Cash App, for example, they didn't have this policy when they first started their businesses, but they do now. It's 3% additional on credit. Nothing additional if you send money via your bank account. They have 135 million users on those two platforms alone. So what makes us different is that we train your staff to communicate it the right way to your customers upfront and often, and we make sure you're following the right rules and regulations.
Okay, so a lot of dealers are a little reluctant to pass on these fees. Matter of fact, it's not just dealers; it's retailers throughout.
Of course.
Are a little reluctant to pass on these fees. One, they're thinking that, hey, you know what, the customer's not gonna come in here; they're gonna go somewhere else where they're not charging a fee.
Sure.
I personally believe that doesn't happen actually that often. But what do you
Right.
suggest dealers do that when they're not ready to pass along these fees yet?
Well, the biggest thing is to create some awareness. And that's why you come in and you're educating your dealer body is really create some awareness around this credit card expense itself, right? We need to at least know what they're spending and if they're being charged the right thing, the right cost that they agreed to in their agreement with their merchant provider. So as you know, right, this is your business that oftentimes on their financial statement, it's lumped into outside services. There isn't a check that's cut every
Mhm.
month. It's the busiest time of the month for their controllers. So they're typically not looking at what this cost is. And a lot of times these merchant providers are increasing their costs and they simply put in 6 or 8 point font at the bottom. We've increased your costs. If you agree to continue to process with us, then you've agreed to this increase, right? I mean, a dealer would never be able to get away with something
Right.
like that, right? But
Never.
the point is that it's important to create some awareness around what are they spending? What is their effective rate? How many basis points did you agree to 10 basis points or 20 basis points? But when we actually look at your statements, it's really closer to 30, right? Because they've got hidden fees. We even have to make sure that they're using up-to-date technology with their terminals. We just had a dealer that plays golf with his merchant provider, but he didn't realize he was getting an additional $1,100 a month charge because he didn't have chip readers on his machines, right?
Oof.
So the first step in all of this is to really create some awareness around who is your provider, what are they charging you, are your machines up to date, do you have the ability to run PIN debit, are you doing a lot of transactions that are card not present, that sort of thing. So we offer to you and all of your customers an opportunity for us to do a statement analysis. We don't charge anything for it because again it breeds that awareness. It's 3 months worth of statements including American Express if it's separate, and what we'll be able to determine is what their effective rate is, what percentage are using debit, if there's any hidden fees, things like that. And so I welcome everybody, reach out. We'd be more than happy to do it. And it really is a worthwhile exercise. So that's the first thing is creating awareness around the expense itself.
Okay, you actually answered my next question that I was going
Okay.
to ask. Do you guys analyze their credit card charges and give them, a synopsis of a summary of this is what you're actually paying on a monthly basis to your processing vendor?
Absolutely. So
Oh,
we'll do that. We'll run the analysis, show them even if they don't go with us, they can certainly find ways to negotiate with their current provider, right? That we almost always find hidden fees. And then from there, we'll be able to show them what they could potentially save if they went to a surcharge model. We take their exact data, we break it down, we look at all the different components. And on average, for every $10,000 expense that we see, it will save a dealer over $250,000 in the next 3 years in net profit savings. So 10,000 equals $250,000 in 3 years typically. It's a lot of money.
yes, it is. Yes, it is. So one question when I think about surcharges, because we've seen this a little bit here in some of these states, is sales tax on those surcharges. I don't know, do you guys look into or have knowledge on the sales tax that's being charged and whether or not the surcharge is subject to a sales tax or not?
Well, it's a really good question. So some states are and some states are not. And what's interesting about this program, surcharging, cash discounting, all of it, is that it's constantly evolving, right? And the laws, making sure that people are up to date. Like for us, for example, our technology and our machines knows the difference between a credit card and a debit card. So that's how we keep them in compliance. Even if a customer doesn't have their PIN code, we make sure that they know if they're using debit, no surcharge is added. Specific to sales tax, basically you're only going to be charged that extra percentage on just that 3% if that state does charge sales tax. So each state is a little different. That's also why they have great smart partners like you to make sure they're doing it right. Certainly we're not CPAs, that's why we work with great companies like yours, but at the end of the day, yes, there's some states that require it, and we can certainly help walk them through exactly how to do that.
Okay. Earlier on, you had said something that struck me, something about training. So you had mentioned about
Yes.
training your staff to be able to process and handle. What's involved in your training? Can you give us a little background on that?
Of course. Sure. So we have a twofold training process, and it's really what we found that is that 1-2 punch that has worked for all of our stores. So very first, when we sign up with a dealer, they are enrolled in what we call our Dealer Merchant Services University. It's an online training platform. It's 12 minutes. They're 1 to 2 minute videos. And that's where we train and certify all of the relevant and customer facing employees prior to launch. And what we do is we want to breed that familiarity. You've got new machines coming, you've got new pricing models, you've got new word track. We make sure the accounting department is trained, and we do new hire training in perpetuity, right? So, and refresher training. That's our online training platform. We've trained and certified over 10,000 dealership employees across the country specific to a compliance surcharge program. That happens about a week before our team is actually in the store. And our team, mostly all automotive professionals, they understand the business, they understand what it's like to be on a service drive, things like that. They're actually in the store. And so the online happens first to breed that familiarity. And then we're on site in the store to smooth out all the rough edges so that when they take on a process like this, it just doesn't blow up the store. And we've done it so many times, we know exactly all the components to make sure it goes smoothly.
Okay, perfect.
Yeah,
So what about integration? Can you give me a little background? I mean, I always dread the fact of when a dealership changes their DMS system.
sure,
It is like
sure.
a nightmare trying to get everything integrated. How does this work with you guys?
Well, good question. First and foremost, none of the DMS programs today have a formal integration with a merchant provider that offers surcharge. We've talked to all of them, right? They're not there yet. However, we work with all of them and we don't need a formal integration. And so we work closely with the accounting department. Our COO is a former controller. And so she created all the reporting and everything to make sure that it is a seamless transition. We have a joke, if the controller's not happy, nobody's happy, right?
Yeah.
And I think we can all agree. And so from an accounting perspective, you don't need a formal integration. As that continues to evolve, of course, we'll be the first ones to get it. But CDK, for example, does not have and won't allow for any formal integration with a merchant provider that does surcharging. So again, we know all the ways to make sure it's all flowing the right way. So all the machines will ask for employee number and RO number. So they know where to find all the transactions, lots of search capabilities, but no formal integration is required.
Okay, perfect.
Yeah.
So this was very informative, Amber. Thank you. So as we
My
go
pleasure.
into 2020, as we go into 2024, dealers need to be looking at their expense structures as inflation has increased costs, but with the influx of government cash and strong grosses during the pandemic era, expenses were not a focus, and it's time to really get back into it.
Sure.
So we are beginning to see a lot of credit card surcharging happening in retail stores to fuel stations as it become more and more common in all industries, and it's maybe something the dealerships should be taking a look at. So if you are watching, I encourage you to start honing in on your expense structure. And if you're considering surcharging for credit card transactions, please give Dealer Merchant Services a call and speak to Amberly and see how her and her team can help you implement the process. Amberly Allen, founder and managing partner of Dealer Merchant Services, thank you so much for joining us today and taking your time. We appreciate it.
It's my pleasure. Thank you so much.
So thank you for joining us today. We look forward to seeing you again in April.